Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990. S&P 500 is now down 6.28. The 10-year Treasury is up 11 basis points, 3.345. That's great for our seniors, not so good for home borrowers. Mortgage-backed securities, they're down 78 basis points. That is a huge drop. What does that mean? Well, that means interest rates are up, and every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. What did loans actually lock at on Friday? 30-year conforming 5.87, jumbo 5.716, FHA 30-year 5.676, USDA for those rural borrowers, nothing down here, 5.672, and the best loan on the market for those that actually earned it. You can't just apply, you have to have earned it. The VA loan, 30 years, 5.516. But why? Why is all of this happening? Why are the rates going up the way they're going up? What's driving this market? Well, we're still going there from the Powell plunge. That happened a couple weeks ago. We saw what happened when he came out and told us about what was going on and what he was planning on doing. It's going to be painful. They told us that over and over again. Going to go into recession. They told us that over and over again. They want to get the inflation down. That would be helpful. But we got a great jobs report on Friday. Or did we? 82% of the gain in the jobs report was from 16 to 19-year-olds. Full-time employees lost 230,000 jobs, showing that all the gain was in part-time employment. When factoring this in, along with 100,000 in negative revisions, it was not as strong as the headlines would make you believe, and looks a lot more like the ADP employment report, which is based on 25 million people that they survey. If interest rates come down, it can be an opportunity to make more money, and inflation is the main driver of interest rates. We have seen a big decline in many commodities from their peak. A few examples: lumber, which is down 66%. Wheat is down 44%. Copper is down 30%. Goods account for 40% of the CPI inflation index, and with the decline in many commodities from their peak, along with higher inflation comparisons from last year and Fed hikes starting to really take hold on the economy, we could start to see inflation picture get a little bit better in the fourth quarter. Wonder where we heard that before. We've been telling you that for 6 months already, that's when we would see the benefit of inflation and we would see the numbers get better. As we told you, it's going to come in October. So we'll see if that is accurate. So we're watching all those numbers for you. 10-year Treasury, yeah, well, we're still watching that number, and that's a scary number because it's up, but we've still got that inflation, the recession index is not looking good. So we already had 2 negative quarters. Third quarter GDP is actually looking a little bit better, so maybe we won't have the recession continuing on, but it's coming back. You heard it here first on Ron Siegel Radio. Sorry to be the bearer of realism. Didn't mean to do that to you. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.